In this video, I'm going to be taking you guys through a quick liquidity-based forex strategy, which you can simply copy in order to become profitable. I'm going to be showing you guys a full trading plan, including the rules, risk management, and also targets. So you can just simply copy the strategy and make it as mechanical as possible. If you guys want access to the full PDF document containing this trading plan, make sure to comment trading plan below and I will send you over the link. But without further ado, let's get straight into the video. Alright guys, so welcome to the video. Before I get into the content, as I said in the introduction, if you want access to this full trading plan, including the strategy, the money management side of things, and also an extra on how to journal the trades in the most optimal way, make sure to comment trading plan below and I will send you guys over this free document for you to access and do with as you want. Update it maybe if you want, or just keep it how it is. But if we get into the actual strategy now, and then I'll take you through all the smaller nuances as well, such as risk management and the journaling process. So as for the strategy itself, the first thing that we always do is to identify the overall market structure and direction. And for this, I normally use the 4 hour. So I'm going to go ahead and add that in actually on the 4 hour. And then what we want to do after we have identified the market structure and direction on the 4 hour, that is when we will go through down to the lower time frames in order to identify the current order flow. And for that, I use the 1 hour and the 15 minute. So if we just go through this as an example, if we go back to okay, so what I mean by identifying market structure and direction, this is going to be a quick example of how we actually go about doing that. So starting off on the 4 hour, if we're simply looking to follow this overall trend here, which is sort of like the intraday levels that we are interested in, we can also see that price has formed this sort of area of support just here, which we know that price is likely to going to gravitate towards since it didn't take any liquidity to the downside. So as for overall targets on this position, we would be looking to take price down to these previous lows. That is the first thing that we're trying to look at. And then after that, I simply would go ahead and mark out the current market structure. So we can see here that this was the most recent 4 hour breaker structure, which we'll mark on like that. And all of the levels above aren't really relevant at the moment because we only want to be focusing on the current price leg. So by current price leg, I mean between the high and the low. So that is to say, if price comes above this high, we don't want to be looking for sells anymore because that would be considered a change of trend or a change of character for price to then continue bullish back up to some previous levels. So what we've identified here is the 4 hour structure. We've had a break to the downside just here. So we are looking for sells somewhere within this range. And the next step is to identify an area of 4 hour liquidity and wait for a sweep of this area. So the area that stands out to me at the moment, if you look and see in this range, all of this is efficient price action, meaning that there aren't any imbalances. But what we can also see is that there is this imbalance just above. And we can also identify this area here of 4 hour liquidity, where you can see that we have multiple wicks within this area. Lots of people were selling here previously, so price is likely to gravitate towards that area. If we also go down to the lower time frames, we can see that an extra confluence is that we have also this area of supply, because this is the one that broke structure to the left and created this imbalance. However, since we have had multiple taps of this region, before selling from this area, we would like to see price sweep this previous liquidity, which brings us to the next step, which is to simply wait for the liquidity to be swept. there we go. Notice also that once price swept this liquidity, it fell to break above. We had this wick above, and then price immediately closed back below. That brings us to the next step of the strategy, which is to wait for a confirmation entry on the 15 minutes. So for this, we need to see a break of structure and we need to see imbalance created. So let's go over to the 15-minute. So at this point in time, since I am looking for sells, what I would go ahead and do would be to mark out the level that I need to see broken in order for a confirmation to become valid. So if we're looking at this 15-minute trend, which is still bullish, we can identify that this was the pullback which put in a new high, making this low the most recent higher low, and therefore this is the area where we want to see price close below in order for a confirmation to become valid. So if we just play price and see if that happens, and there we go. So you can see that price closed below this level, so we can mark that on as a change of character. This is what the C stands for. And basically, now that we've had the sweeper liquidity, price broke structure on the 15-minute, we can basically identify a potential area to get in the trade. So for myself, what we can identify is that we have this area of supply just here, and we also have this one above, which was left imbalanced. So in a scenario like this, I would simply enter on the lowest one and then just have stops above the high. And for targets, we go over to the trading plan. 1 to 3 target, no break even or partials. I'm gonna add here actually, except during high impact news. So let's say you're in a trade when NFP or FOMC comes out, any high impact news event, then I would make break even, the trade break even in this case, since I don't want, you know, price to cause a lot of slippage and for us to lose 2 or 3% when we would only be risking 1%. So we just drag this down to 3% target, which aligns very nicely with this previous low. All of the confluences are now there. We've had 4-hour liquidity swept. We also had this area of supply tested. Price has then broken structure on the 15-minute with imbalance created, and then we are simply looking to enter on a retest of those previous areas of supply. We play price now. You can also see that price is building some liquidity below the supply, which obviously adds probability to the trade, since we know that once price sweeps liquidity, it normally gives a reaction in the opposite direction. So there we go, trade tagged in. And let's just play this on the higher time frame. And there we go. So that is the first example that I wanted to go through. So to summarize what we're looking for once again, simply identify the 4-hour structure like we did here. Identify an area of 4-hour liquidity, such as this one where we had a build-up of these wicks. We also had that imbalance above as well. Once price sweeps 4-hour liquidity, we then go to the 15-minute and wait for a break of structure with imbalance. We then enter on an area of supply, depending on the situation where the liquidity is and also where price left unmitigated as well. So now that we've got that example out of the way, let's go to a different example just to make this a little bit more clear. So there was a nice example on GU. Just here. So at this point in time, first step, go to the 4-hour and identify the current market structure. So for this, let's mark out the mitigations and the structure. So we've clearly had a mitigation of this area. The reason I chose this, by the way, is because this whole area was a daily area of demand, and this area was basically the refined area below some liquidity. Following the mitigation of that area, price then broke this structure. If we mark that on, price then gave a further break of structure just here. But what we have done is left these sort of relative equal lows, which we'll mark on as liquidity, which also leads into this imbalance just below. So one of the things you often see price do when we have a situation where we have prices bullish on the 4 hour, we have an area of liquidity at the most recent higher low with imbalance below. What you often see price do in this case is price will come down, take out this liquidity, which some people would obviously be seeing as a breaker structure, to then get a retest for sells. But what price will actually do when you have this imbalance below is it will simply wick below the structure and then continue to the upside. So that is what we are anticipating for price to do here. So as soon as we see this, where price sweeps the liquidity on the 4 hour, we go over once again to the 15 minute. Or if we can't see anything on the 15 minute, we can always go down to the 5 minute and just refine it. So we play price. We can see that once the liquidity to the left was swept, price was in this downtrend, but then we shifted structure. We went from lower low, lower high, lower low. Price then impulsed to the upside, taking out this previous structure just here. So that's our change of character. And what we can also see is that price left behind this imbalance level of demand, which created this imbalance. And price has now also started to create some liquidity above that level. So what we do now is simply set the limit like so, and mechanically target a 1 to 3 like this. We play this on the higher time frame. And there you go. Also notice how when you get these sweeps of liquidity, price, when it creates an area of demand or an area of supply, it nearly always respects that area if it has also broken structure. It's like a weird thing where price can't breach it for some reason. So yeah, that was the second example I wanted to look at on GU. We also had another great example on GU, which I'll quickly go through as well. If we go back to here. So in this case, GU was quite range bound, and it was in this consolidation phase for pretty much the whole of January. But what we were anticipating at the time was that price had swept this area of daily liquidity just here. Notice how it wicked above and then immediately impulsed over to the downside. This was a major area of daily liquidity. We also had a daily area of supply above as well. And then after we had that reaction, price began consolidating. But if you don't count the wicks, price did actually create a lower low. So if we mark this out, we had higher low, higher high. Price then shifted, creating a lower low. We then had a pullback. Price then broke down. We then created a lower low. So if we just mark that on, we'll mark this as the change of character. Like I said, discounting the wicks, so we had body closures below. And then we also had a further break of structure just here. So the current 4-hour range that we were looking at was between this high and this low. If price broke this high, we knew that it was likely to continue bullish back towards these previous highs. Therefore, we wanted to be looking for sells anywhere within this price leg. And what we can see as well is that we had this 4-hour level of supply where we had this initial push down. Price has then come back up and we swept the top of the level of supply. So you'll notice that now lots of retail traders are using this whole supply and demand sort of strategy. So oftentimes what you will see is that when you have a clear area of supply or demand like this, price will sweep the top of it because there is liquidity resting above where people are selling from the level with limit orders. And then after you see the sweep of the 4-hour liquidity, price will then give you your breaker structure to the downside. So if we just mark on the top of this level, so this blue line is the top of that 4-hour level of supply. And what we want to see now is that breaker structure on the 15-minute. So what we see at this point in time is that this was the higher low, which put in a new high. Therefore, this low is the one you want to see broken in order for the sells to be confirmed. So if we mark that on, and then wait for this level to be broken, there we go. So we got a breaker structure to the downside. And if we play price a bit, we can see now that what I did in this case, because there wasn't really any clear zones on the 15-minute, I just simply went to the higher time frame and then found this zone. So if we go back to the 15-minute, you can see that this was sort of the whole supply zone which broke structure to the downside. And we also now have this area of sort of like a lower high, but it's an area of liquidity below the zone. So in this case, we can simply set the limit on this zone and target a 1 to 3. Stops just above that zone. 1 to 3 target. And then if we play this on the higher time frame, and there we go, another nice trade. Sweep of liquidity, break to the downside, area of supply created with imbalance, then enter on this area. So that's it for the strategy itself. As for the money management side of things, which is, arguably more important, what we're going to do is simply risk 1% per trade always. And this is regardless of whether you are on a winning streak, on a losing streak, regardless of how you feel about the trade, whether you think it's a good setup or whether you think it's a bad setup, we always want to be risking the same amount per trade. Obviously, like I said, you can adjust this to your risk tolerance as well. So if you are a more risk averse person, maybe do 0.5%, or if you can tolerate higher amounts of risk, maybe 2%, but I would never say do more than 2%, as even if you are on a smaller account, there's literally 0 point trying to flip that account by using high percentage risk, because there is a higher probability then of you obviously blowing that account. So if you can't tolerate, 10-20% drawdown, if you lose 5 to 10 trades, then don't risk more than 1%. One loss maximum per day. So if we lose one trade in a day, simply stop trading and don't look at the charts. And like I said, only make break even when high impact news, such as these. Obviously there are more, but these are the 3 main ones that I would look out for. And as for the journaling process, how do we go about journaling these trades? So what we can do, this is how I personally do it, and this is what I find to be the most useful, is we basically note down first of all the technicals. So this includes, why did we take the trade from a technical perspective? Was the trade valid for the strategy? And if it wasn't, write down why you think you took the trade. And then second of all, we are going to note down emotions. So how you were feeling at the time, during the execution, before the execution, and all the sorts of things to do with your emotions, such as if the trade was approaching TP and you got out early, why did you do that? If the trade hit stop loss, did you get angry and enter the trade again? All of these sorts of things, just note them down. And then over time you will notice a pattern, and you will be able to see and discern what you are doing wrong and what you are doing right. So if you miss a trade, why did you miss it? This is also included in the emotions section. And we are also journaling any trades that we missed as well. So obviously you can say that any of these trades you missed, but we want to be jotting down the missed trades that were valid due to our strategy. So let's say at the end of the day, I'm going back through the price action and I noticed that we had this trade here, but at the time I didn't enter the trade, then I would still note that down as a missed trade as well. And just to give you guys an example of how I would actually go about doing this, I will show you an example. Okay, so for example, here we have euro pound, screenshots of the trade on multiple different time frames. And then here we have the technicals. So price flipped bullish on the 1 hour and pulled back into demand, filling in the imbalance. Price then gave a 15-minute breaker structure after sweeping the low and pulled back into this demand. Price then created clear 15-minute bullish order flow, and there was a clear area 5-minute demand in a discount. And then in this zone, price broke structure to the upside on the 3-minute and then pulled back into demand once again. From psychology, the reason I didn't take this trade and missed it was because on the broker that I use on TradingView, this level had already been tapped. We had this sort of weird market open pricing. So at the time I didn't see it, and I was only looking for sells after a sweep of the 4-hour liquidity just above, which meant that I was married to the sells and didn't see the buys. So just little things like that. Obviously it's going to be different depending on the trade and depending on what you want to note down, but I would definitely go about doing this. This one in particular is my weekly review document. So at the end of every week, I will go and put all of my trades into this document, including missed trades as well. And at the end, I will also do like a little summary, what went well, what could I have done better, key lessons and things like this. And I'll simply do that every week for all the trades I took, plus the missed trades as well. So that basically concludes this video. If you guys have any questions about this strategy, make sure to leave them in the description in the comment section below. If you guys want access to the trading plan, make sure to comment trading plan in the comment section below as well. But thank you guys for watching, and I will see you in the next video.